Good morning, everyone. Well, the Dow finally made it to 20,000 after being quite the tease for a number of weeks, and I like that. It kind of adds to the drama of the whole thing, and then just up and gaps up right beyond 20,000 at the open 2 days ago. And right now it looks like all the majors are consolidating gains after their nice runs. We see that also in the big caps that have been doing well, like look at Netflix that had that gap higher, and then Facebook, and Amazon, on and on. They had nice moves, but now they're consolidating. So it looks about right. We've got a number of names that we are commenting on. I did want to add a couple remarks to AGX, which is on our focus list. So that one had a big upside move. This is one of those I'd call stuff stocks, in the sense that it's involved in construction and engineering and that sort. So it had a big upward move. I think that's is that a pocket pivot? But it hit new highs, and now it's consolidating those gains.
I'd call it a pocket pivot breakout. So, but again, yeah, it's a show of strength, and you don't want to buy into that. You want to try and buy on the pullback because you're limiting your risk that way. So that's how I would approach this. I like this pullback in here. It looks pretty good.
Yeah, it's coming in on low volume. The rate right now is minus 52%, so it looks like it's doing what it should. NVIDIA is another one that we talked about in terms of getting out of your position, because it was a quite an obvious sign on that high volume outside reversal, and now it's just trying to form a base. It looks more or less constructive.
Actually,
this looks like
Dr. Remember what we pointed out last week, though? I was pointing out that you had undercut here. You had undercut this prior low in the pattern, and that set up an undercut and rally. So last week we saw it sitting right at the 20-day line. That was actually, to me, viable for a trade, and it's continuing higher. I would not be surprised if you saw it retest the prior highs. So right now you're playing off an undercut and rally, and everybody wants to short this thing now, so I think it may head back up to the upside. So, but again, this market's a mixed bag, and you got to watch things. If this thing broke through the 10 and 20-day line on some heavy volume, then the 50 line comes into play as your longer-term support level. So, but do you think this thing is topped for good?
I don't see the signs yet. I don't see.
No, neither do I.
You have this major high volume reversal, which could have been the end. Usually the stock gets very volatile after that point. It remains volatile. That to me is a trigger on a great short sell on strength, because as long as that volatility remains in play, the odds that it's going to break down further are very high. I mean, we're talking like 9 out of 10 times in all the studies I've done over the decades, and it hasn't done that. It's gotten quiet. The volume's getting quiet. It's always under average. So I think it's going to strike again. I think it's setting up for another run to new highs.
Yeah, that's what it looks like to me. So I actually think it was buyable right up to 20 days. It's a nice trader. So
yeah, no, it was a good entry point, actually, because of that undercut and rally. But I mean, if any of you did take advantage of that, and you're sitting in a position, just be careful that it could retest the lows as well, because it's kind of in no man's land right now. It's trying to make up what it wants to do, and it's hard to predict at this point whether it's going to retest lows or test old highs. It's not enough information right now. So maybe you want to keep your stops real tight, because on a retrace, it could retest the lows. I mean, if it breaks through the 50, rather the 10 and the 20-day, which are clustered together, it'll probably head to the 50. Let's see, we've got Z. That's a Zillow Group. That one has been trading sideways. It's still in a fairly tight constructive trading pattern. It went below the 50-day, but as you can see, prior to that, it's just managed a fairly sideways move. And the earnings on this thing come out, according to this app, on February 8th. So that's still a couple weeks away. But it looks to me like it's quiet and constructive right now in a sideways pattern. I wouldn't be surprised if it wants to go higher. It's going to set up and have some sort of pocket pivot action. The Chinese names, we've got 3 of those on our list: Momo and Baba, and then the JD, and they're all in uptrends. They had trouble earlier on because of the speculation that Trump would be isolationist in terms of his policies, trade policies with China, which of course wouldn't be good for anybody. But nevertheless, these things are in uptrends, and so they look like they're working all right. They're not doing anything wrong. With Baba, it had that viable gap up on earnings, and you could keep your stops tight on this one. Sell if it undercuts the low of that gap up day by, let's say, a couple percent. Let's see, we got the last I wanted to mention is this real thin one that we've got on the list, the one-day wonder, Amyov. And twice now we've commented on it before it launched because it had pocket pivots twice now in the pattern. So it's very clean in terms of that action. The first time it went up 20%, the second time about 15%. But what I was noticing is it was sloppy in those 2 periods of pocket pivots, but now it's kind of it's calming down in terms of the price action. It's not so erratic anymore, and it looks like it's getting clean and tighter in there. As long as the volume and the price can remain in this kind of tighter pattern, I think that's quite constructive for the stock. So you might want to still keep an eye on this. But keep in mind that buying even 4,000, 5,000 shares of this thing can move the price quite a bit. So you want to make sure that you're working that order so you don't get handed 3% slippage on the stock, which is very easy to happen on a trade.
Yeah, everybody buy your shares now, because later today I'm going to come in and buy 50,000 shares and run it to $15. So.
Oh, you'll put the pocket pivot in place, actually.
Right.
And then
and I've noticed this thing, it'll move almost $1 on a 5,000 share trade, So if I come in there and I want to buy, I mean, I'd have to buy, just to get a starter position, 30, 40, 50,000 shares on this thing. And if I did, this thing would go to the moon. So I'm out on this thing.
it's like, we've always talked about, you got to find the stocks that are like meaningful positions, and I was talking to a friend who he's done very well. He's a subscriber, and he uses some of our commentary to round out his views on the markets, and he's now trading up around 200,000, 250,000, but he started under 100, and so that's great, but at the same time he was complaining that some of these stocks are he goes for some of the thinner things too, and he said that a lot of those names you can't trade anymore. And I said, yeah, with a $250,000 account, you can't be trading real thin names, because it's just not going to work. You're going to have too much slippage. And I've said it's better for you anyway, because that stuff we don't talk about stuff that's that thin. The stuff that you were trading when your account was, say, under 100,000. We're dealing with higher quality names, and your odds are just going to be a lot better. So in a way, it's good that your account's now up around, up above, around the $250,000 level, because then it just forces you to trade higher quality.
Yeah, I would say based on the average daily trading volume of Myovant, institutions aren't really trafficking in it. I think they're going to need to show some strong results with some of the things they have in their pipeline before you'll see institutions get very interested here. So right now it seems like they're not really playing. It's a retail thing.
Yeah, although I wonder, you get some of these funds that are small cap oriented. That's their mandate, meaning that they're looking for stock. They only can deal in stocks that are like under $1 billion market cap, and this is 659 million. So I would think that those types of funds could play in a name like this. And I think this name also had there were 4 investment banks that all put price targets anywhere between 16 to 18 on the stock, which is kind of surprising. And so there's a lot of hope going on with this name, because it was IPO'd at 15 and it couldn't hold that price on the first day. It broke issue. and it's traded under that ever since. So yeah, it's kind of interesting that all the institutions like it, but the price is not reflecting that hope that the institutions have for the stock.
So what else are you looking at? I've got some questions here real quick I thought we could get into. Somebody's asking about, I believe, some oils.
The question.
Pardon me?
Let's go into the stocks and questions now, because that was I just wanted that. Okay. EMEOB was the last stock I wanted to make mention.
Right. So I don't know. Someone's asking about this one. This is what, an oil name? Well, you got a pocket pivot here 4 days ago, and now you're just pulling in on light volume. So you should be able to figure that one out pretty easily. So, but I don't. Is it going to be a big winner? The oils in general. I'm assuming, is this an oil? This is an oil, right?
Yeah, it's machinery. They distribute pipes and valves.
I'm going to bring up my HGSI here. So MRC Global, yeah. Let's see where what these look like on a macro view. So you can see a lot of these oils are trying to come up the right side of these big pod-like structures, and so they can run an overhead anywhere. But I think, if you're looking to play this and you're looking for a nice little pullback, maybe it meets up with the 10-day and the 20-day. That's how I would handle it. I've looked at Murphy. And this one looks like garbage to me, so I'm not going to. The thing with the oils is that it seems like it's really a mixed bag. Here's another one. This one's like, is this going to be hot? It's an oil, and they all seem to be the same. The ones I've liked are like Parsley Energy, but all it's doing is sitting tight in a base. For all I know, it's going to fail. And then you've got, in fact, I'm watching this actually as a possible short if it does. And then other ones, Fang, this one's been trying to come up off the lows of a base, and you get a couple of 5-day pocket pivot signatures, but it's coming out of this low base range here along these highs. So let me just, whoops. So along these highs, it's trying to come out. So I don't know if it pulls in then tries to come up, but with earnings coming up on 2/21, I guess it is. We'll see what happens. But the oils to me are I bought them from time to time. Every time I buy them, they do nothing, and then I sell them. And then, of course, they'll go up like 30 cents from there, and then they'll roll back over. So, but...
Well, yeah, also these stocks trade in these wider price bands, which makes them a lot harder to deal with support points.
Yeah, here's another one.
Hard averages.
Rowan Drilling. This one has looked... that's a nice looking base, and you've had some pocket pivots in the base. You can see the blue highlight down here along the lows of the chart. But yeah, it just can't go anywhere. It has earnings on February 24th. That's a month from now, roughly, and it just can't really get anything going. So, to me, these are just APA, someone's asking about, so here we go on. Oh, that's another doggy looking one. There's nothing going on there. ATW... Yeah, but now look at it starting to roll over. So, how do you know this thing doesn't become a short? Almost looking like a short to me. Failing at the 20-day, maybe it's headed for the 50-day. But, a lot of these, I don't know. They're just nothing. They're not going anywhere. And you're not getting any upside thrust. And I would say that's an issue for a lot of stocks in this market. You get these blips to the upside. Like let's look at like Momo, okay? I've been playing this one, and what I do is I buy it on the pullbacks, and then I sell it on the upside move. So you get a bottom fishing pocket pivot here, runs up, and then it goes through the 50-day, pulls into the 50-day line there, and that would be an entry point. Then it runs up again, it pulls into the 10-day line here, volume dries up, that's an entry point. You get the pocket pivot here. Bingo. Now you're pulling into the 10-day line here. Does that become an entry spot? So I'm kind of watching this on the 620 today. I'm not in the stock. I was in it yesterday morning, and then I saw it just start to waver, and I noticed a couple other Chinese stocks were coming in like Weibo, and I wasn't sure what was going on there, so I just bail and then look to come back in at the 10-day line. It's trying to hold, but we'll see if it does. So, but that's Dr. K. That seems to be the case for a lot of stocks in this market. It's just like they have a move, and then blah, that's it. Let's see. You there?
Yeah, we don't get the those nice sustained
No,
uptrends
it's like
that
blips.
characteristic of many years ago. That's why taking your profits when you've got them, when the price gets ahead of itself, and it often takes one day, and you take your profits, and then you look for the next one.
Right. Someone says money flowing into semiconductors and optical stocks these days. Well, yes and no. There's ocular, which is, you had a Bible gap up down here 7 days ago. Now you're breaking out. You're kind of, you're coming back in. Maybe it's Bible. I actually bought this thing down in here and sold into this breakout. So I'll take a profit there and then leave it alone. So and see if it comes in, and that's how I'll operate with something like that. It doesn't. It tends to be volatile and it doesn't really go anywhere. Light, this one's coming off the lows, Lumentum, and it's pulling in, but I don't see money flowing in there in any sustained basis. So I think, if that's what you're seeing, you're really not seeing what you're seeing. So too much of that Five Wives vodka maybe. Finisar to me looks like it might be a short. There was a nice undercut and rally last week, and I thought, or was it on Monday rather, and that was actually tradable. You got a nice move to the 50-day, and then it reverses back into a short in my view. And now it's hovering here. I'm actually short this one right now, and it's coming in a little bit. So you got Sienna. That's another one. It broke out, and you had decent volume 3 days ago, but now it's coming back in. So, maybe it comes down to the 10-day, and that's where you buy it. But you got to buy them on weakness. Coming in and buying strength, or even buying breakouts, and even my colleague Kevin Martyr is constantly telling me, oh, make sure you discuss breakouts too, because people still buy breakouts, and I said to him, well, yeah, that's like walking with dinosaurs when you do that, buying breakouts. It's like, are people still that stupid?
The breakout thing hasn't worked since
No,
2003.
and you're an idiot if you buy. If that's the only way you buy, you're an idiot. I'm sorry.
And it's actually
So anyways.
it's a bit it's just flabbergasting, frankly, that the pocket pivot concept was born when, out of my own frustration, 2004 breakouts stopped working, full stop, and then 2005 they continued to not work, and that's how that concept came to be. But since then, it's continued to work, of course, in context with market environments, in terms of how you trade these pocket pivot stocks. But as far as base breakouts, they've never ever returned. I suppose there's going to be a point, if we get a sustained uptrend, that breakouts will start working again. But we haven't had that kind of sustained uptrend since 2003.
Yeah.
So that was 14 years ago.
Someone's asking about this Syneron Medical. This is a junky little $9 biotech, so I'm not interested in it. Like I said, 180,000 shares a day it trades, $9. I'm not going to play with this. I don't know what the story is here. So STX, yeah, I noticed you've seen some strength in semis. If you want to play this as a viable gap up, you can, and your low, I guess, is what, 42.16, so that would be your stop if you wanted to play. But there's a bunch of these, like IIVI did the same thing. I saw that thing when it happened and tried to get a limit order in on the pullback intraday, and it didn't quite kick. It turned and went, and so I got left behind. But it's still a thin trader, 459,000 shares a day. And you have names like Marvell also breaking out yesterday. Now here's a breakout. It's coming in. You had TSM. This is all the Taiwan Semiconductor. Okay, that's moving up to the highs of the base. You even have Intel today is moving higher. That had a pocket pivot breakout of a cup with handle. You'll notice there's a lot of names among big stock NASDAQ names that have had similar patterns. You see Apple coming out of a cup with handle. You're seeing Google coming out of a cup with handle. You're seeing Priceline, I believe, coming out of a sort of a double bottom type base. But you've seen a lot of these stocks breaking out of these little bases. And I'm not sure if that's positive or telling you that, okay, here come all the breakouts, sell them, and because the breakouts don't work. But I guess everybody who reads O'Neill's book, they get all excited because it makes it sound like you're going to make tons of money buying breakouts. And that's really not the case anymore, unfortunately. Someday maybe it all comes back. But I got to think we go through at least one good bear market before things, quote, normalize. So the way I approach things, I'm selling into some of the strength. And if you look at Priceline coming off the lows, what do you have here off the lows? So here's a way to play them. And this is why I'm not a breakout buyer. You get an undercut here. So you get undercut and rally. The rule for buying an undercut and rally is once you turn back above that low, you can buy. And if you want to use a stop of 1 or 2% below the low, so like in here, I guess, maybe it's a little further, you can do that, and that's reasonably tight, better than buying a breakout and then using 6, 7, 8%. So you can play that, and then you get this move. Now it breaks out, you could be selling into that move. And that's really, in my view, the way to be playing a lot of stocks and not buying breakouts, because you're just not going anywhere with them. And you can just prove this over and over again. This will be a topic we'll be covering in our little mini conference and traders dinner that we're holding on March 18th. I don't know how many of you saw the email for that. The whole intention of this thing is to have a small, intimate affair. So my thinking is if we get 20, 25, 30 people coming, that's going to be perfect, because it'll be small enough that we can all have a nice dinner and talk. But what Dr. K and I want to do is update a lot of our work with respect to the pocket pivots, the viable gap ups, the market timing. I'm sure Dr. K will do a song and dance about his VIX model and stuff like that, and how it's evolved. That should be very interesting for those of you who like that kind of stuff. But that's kind of the point of this, is to update things. I don't know if I want to write a whole new book, because things change so quickly. So it's possible this could be a format that we use to keep members updated on where we're at in terms of latest developments with respect to all our techniques. So in this case here, you see an undercut and rally move that you could have played. And if you look at, say, I believe there's one in Google as well. No, not really, actually. This just kind of pulled a shakeout here through the 50-day and then turned higher on a pocket pivot move, I believe that was. Well, that was a 5-day pocket pivot. Then you had another 5-day pocket pivot here, and then the breakout. So now it's run up. If you look at this, it's run up a fair ways. It's ready to pull in, I think. Tesla is another one that could have been bought, down here on the, what I guess we'll call this one the bottom fishing pocket pivot right here on this day with this volume. And then the next one, you had one here, and one here. So you had three days in here that qualified as pocket pivots off the 200 and the 10-day moving averages, and you could have been in on that one there. You'd be riding this beautiful uptrend. And now, IBD will be telling you that here comes Tesla, and it's the buy point of 286 or whatever, way up here. Maybe they'll do something here. But really what you're doing is you're running up to the top of this big mountain range pattern. And this may be where you start to run into resistance, particularly with earnings due next week or the week. I think it's the week after. I think it's the 7th or 8th. But in any case, that's a situation there. So this thing's extended. It's now working on its 8th week straight upside week here, and it's going to pull back. And if I was playing that one, which I was, and I sold up in here right near 240. I'm sorry, 248. I think it was. And it's gone. Of course, it's going to go a little higher. But that's the sort of thing that we're looking for. Anyways, I'm going to go back to oil GLP with 8% yield. Well, if you like buying yield stocks, go for it. So, but I'm not going to buy that one up here. So, AAOI is one optical where you've seen money coming in, but that's probably the leader, and that would be the one you want to stay with. Cypress, somewhat related, and it's run up, but it's extended, so you're not, unless you caught this move here, you're sure as hell not going to buy this thing up here. So,
and that's the other thing about these semiconductors is even in the 90s when the markets were trending, I've always found it very difficult to trade semis because you really have to take profits when you have them in these things, and they trade kind of sloppy. They don't, well, if you look at the 90s and you look at today, the 90s, they were kind of sloppy traders, and many of them, not all of them, but many of them. So the odds were against you. And they tend to, when they sell off, when they in an uptrend, when they do cut back and it's digest gains, they tend to do it pretty brutally to the point where I would get whipped out of the position almost every time. Because to me, I didn't want to take on that kind of risk. So yeah, semis to me have been a little bit more on the risky side in terms of my trading style. And I know a lot of other people who couldn't. It's like it reminds me of like at the rodeo, and you're riding this wild bucking bronco, and the level set to like 8 or 9. That's what these semiconductors have always reminded me of. As opposed to the more forceful, but gentler names that like classic is NVIDIA or Tesla when we liked Tesla. These had great uptrending moves that had a lot of strength and price performance without the type of cutback that would force you out of your position.
What I would do when you're seeing a lot of these breakouts in semiconductors is make a list of them. Just note them down and make a list, and then study that list carefully and see if you can figure out what's different about any of them that might produce a longer term move. Anyways, somebody's asking why is Finisar short. Well, a very simple reason. It's violated its 50-day moving average, so it's setting up as a late stage failed breakout. So here's your breakout up here, and I'm just trading it at face value. Doesn't mean I won't trade this undercut and rally and try to make some money that way, but once it hits a 50-day line, I'll come back and short it. And of course, that's where it's finding resistance. So if you look at this pattern on the weekly, let's look on the weekly. Here's the weekly, and let's make it bigger. It almost looks like it's building a head and shoulders, although you're not getting the heavy volume down the right side on the break here to define the right side of the head. So what it be now is a failed flag breakout. Is this a high tide flag? Here we go again, right? And it fails, and you're getting resistance at the 50-day line. So until it is able to prove to me that it can clear the 50-day line with some kind of authority, I'm going to short it near there. So, and that's basically what I'm going to do. So that's why it's a short. And I think even some names like Light, Lumentum could also be a similar situation. That's not coming out of any base. There's no breakout. Yeah, there's a nice trade off the lows here, an undercut and rally of this prior low in early December, and you get a nice trade there, but it runs into the 50-day line, and at that point, to me, it becomes a short. So I'll short it. And so, you're going to get excited about these kind of names. I think you're probably hoping for too much in this market. Throughout the QE market, we've seen names come out of these and have some nice rallies, but that's about it. And I'm not so sure these are all magically coming to life now just because you have Applied Optoelectronics did well. Somebody's asking a question about pocket pivots. Do you look at them on a weekly chart? Okay, I'm always amazed that people ask this question because I'm going to answer a question with a question. We've been doing this, Dr. K and I have been working together for the last 6 years. Since we stopped in 2001 at O'Neill, and then we joined forces again in 2010. And we've written 3 books, 2 of which have covered pocket pivots. Where in any of that have we ever talked about pocket pivots on a weekly chart? I got an email today. Someone asked me, do you place more emphasis on the 10-week or the 50-week moving average when viewing pocket pivots for a stock? And where have we ever talked about it? It just doesn't apply. It's kind of like saying, we give you flight rules for instrument flight rules for handling an airplane, in inclement weather, and you ask us, well, in the case of driving a car, how do you apply these rules? It's okay, just doesn't apply. So give it up. Just forget it. There's no such thing. So, and really, there's more to weekly charts than pocket pivots. And what is a pocket pivot? The premise of it anyways. When we talk about it in our first book, the premise is basically this. We know, having advised some of the biggest institutions on the planet, that they are the ones that create the lows of the base. So if a breakout is a price volume signature that shows the elephants jumping into the tub and splashing water everywhere, which I don't think is necessarily the case. I think the elephants are now algos. But we also know that the institutions are the ones who are buying steadily and quietly along the lows of a base or within tight areas of a base. So you ask the question, what then is the price volume signature that gives you a clue that that's what they're doing? And that's the pocket pivot. And where do you see it? You see it on the daily chart. Very subtle. So you're looking for something very subtle, and yet a weekly chart isn't as subtle. So there's really no application whatsoever. So anyways. Is Mosaic and McKesson done? Are they a new company? They merged, Mosaic? I don't like that. It can't hold the 10-day line. It's failing at the breakout. I don't like it. FCX is another one. That's trying to hold the 10-day. That's acting better. Go figure. I don't know why. McKesson, that looks like toast, but that wasn't one that I would be buying in the first place. Let's look at the steels. You like the steals here, Dr. Hill? I actually am short this turkey right now, coming into the 50-day line this morning. It's coming in a little bit, but nothing really to write home. I mean, I'm looking for a break to the 200-day line. That's what I would be looking for, shorting this. So far, it doesn't really want to do it. And I don't really understand what goes on with these steals. You know, one day they can't buy them fast enough, and you get a big pocket pivot like you did here on big volume, and that looks so strong. And the next day, bloop, it just rolls back, and there's nobody who wants to own it. And then three days ago, boom, we get clocked. This thing violates the 50-day line. It's just getting clocked, and the next day, everybody comes running back in and pushes it right back up. And now it's backwards started at the 50-day line, but it's looking like a late-stage failure, or sort of. I'm not going to say necessarily. Pardon me?
The thing with these steals is they're a little bit like gold. There's a lot of cross currents involved, which is what's caused schizophrenic behavior, making these, you know, it increases your risk because it increases the unpredictable nature of this group. So, you know, it's just like with gold or oils, steel, you know, you have to handle these with care because they tend to trade in wider banding price patterns. They've never been, I've never really liked any of these groups. I never made much money off any of these groups except for gold when once in a blue moon, and by that I mean once every few years, the price pattern gets real tight and constructive and the base forms and it has a classic breakout to the day. And silver as well, and it's, you know, GLD, the price pattern, you know, you can spot it, right? You know, look at a weekly chart, you'll spot it over the last 15 years. There's been, you know, I think 3 instances or something where it was so evident. And, you know, we went public, obviously, in 2011 when gold and silver were breaking out. We wrote a piece on it. We also wrote a piece when silver topped, and I think that piece came out just a few, like 2 or 3 days after the top, because the top was so obvious.
It actually came on the same day as the top, because remember I had gone on Fox Business News and Stuart Barney was hassling me.
Yes.
About, you know, where's it going to go? And it was like a 26, 27, something like that. And then I said, okay, all right, if you're going to pin me down to something, which is not what I do, okay? I don't necessarily pick a target and say it's going to go here. I said, $50, and it's kind of off the top of my head. Nice round number, right? And it turned out to be right. Anyways, go ahead.
Yeah, gold has had clean breakouts like 2007, 2009, 2011, and you know, you can see it on the daily quite clearly. So, you know, right, since these things topped in 2011, there haven't been any of those clean breakout points, really. I mean, it's going to take more work, a number of months at the very least, to, you know, for these things to have that again. That's the way I like to trade these, meaning, you know, these are very rare traders for me. And, you know, at the same time, I do like the volume dry-up action in something like GLD. You'll see that that's a recurring pattern. Over the last, if you look over the last 12 months, for instance, you'll see when the price volume gets real quiet and tight on GLD or GDX. You could use it on a number of names, but that's often a good entry point because you know your downside risk is going to be very limited because the price action is very tight. And by very tight, I mean it'll be very tight for, say, 3 or 4 days. You know, so you could try position there with maybe a, you know, a 1 or 1.5% risk. But if it works out for you, then your upside is going to be, you know, typically 10 to 20%, especially if you're playing any of these leveraged ETFs. You know, like JNUG. JNUG's a classic. I mean, look what JNUG did in December. That was a real tight banding pattern in December, which, you know, you could have bought that one. Actually, if you look at GDX, you'll see the risk is quite low. So you could have bought it in there in that banding pattern, and your risk on a GDX would have been what, like something like 2%, maybe 3%. But then your upside, you know, you'd have cleared. If you're still sitting in it, you're clearing 25% gain on that trade. So your risk reward is quite tremendous on those kinds of quiet patterns. But you'll also notice that they don't happen very often. I mean, you have to be very selective about picking the cleanest ones. And the other challenge to this is when you do get these big day gains, like in the case of GDX, it had that day it was up 7.5%, and you know it's right up to the 50 days. So you want to take your profits there. I don't think you'd really want to risk, you know, giving up, you know, all that profit that happens so quickly. You know, especially JNUG. I think that would have been up 3 times that amount. Gil, your mic is not on.
Oh, someone's asking about shorting Tesla, but I wouldn't short Tesla. There's no reason to short it. The last place you could have shorted it at was the 200-day moving average, because you would be looking for resistance. When it flashed 1, 2, 3 pocket pivots there, that's not a short at that point. It's a long. And you could have bought it down here, made the trade up to the 200-day line, then check out what's happening along the 200-day line. Once it breaks through, then you go long. I mean, that's what I did. So it's not, I wouldn't short it here. But the thing, my whole point with this discussion about, it's coming near the highs, it may be out of gas here to the point where it's going to need to consolidate. So when IBD is telling you that, the new high breakout is way up here, you already missed 8 weeks of a nice rally. So it may become shortable at some point, but with earnings coming out in a couple of weeks, I'm just going to leave it alone. So, but I wouldn't short it here. So you would have to see some sort of a volume breakdown through the 20-day moving average, first of all, and that's way down at 236 right now. So, maybe something to watch. Maybe it becomes a short again. So somebody's asking, will you be taping that presentation for those members who cannot attend? No. Either show up or forget it, because I'm not getting into any big production with a camera and video and audio and all this baloney. We're going to have a simple projector hooked to a laptop that will probably project from the dinner table, and we'll be able, so that will enable us even after the 3-hour presentation to talk about stocks during dinner time. So this is an attend it or don't attend it event. So, and if it turns out to be, if we sell it out, which whether we do or not, we'll see. I don't really care. I'm just doing it for people who've asked for this sort of thing. I had a dinner with a couple of members a couple of months ago, and that was really fun. And so the idea here is to sort of emulate this. So we like keeping it intimate, and it's exclusive for those who attend. We're not going to start doing presentations. I mean, geez, Louise, $350 to get what is going to be a first-class dinner with wine. And you're going to love the wine labels too on the wine, and a 3-hour presentation plus another 3-4 hours of rapping about stocks with charts available. I think it's more than worth it. So, I'm not here to be a whore. Sorry. And I'm a trader first. Doing something like this, if it turns out to be easy enough, and so far it is, and simple to set up without having to get into a lot of detail about it, then I'll do it. But, most of my time goes to studying the market and figuring out where I'm going to make money in the market, because I make a lot more money in the market than I do selling website memberships. Sorry. I mean, and that doesn't mean I'm not dedicated to it. I love what I do, but I'm not hard up for it, and I'm not going to allow it to interfere with my trading. So if that upsets some of you, well, too bad. Anyways, WDC, Western Digital, that was another one I saw taken off. Yeah, but you look at a lot of these earnings are like, eh. And this one on the weekly is trying to move higher. So here's your gap up move. It couldn't really hold the lows. It came in and now it's hanging out. So I don't know. Maybe it takes off. I don't know. But I'm not. If you want to buy it, you know how to buy it. So TTD. This one is thin and probably too many. There we go. You got to buy this. We talked about buying this along the 50-day moving average 3 weeks ago. If you go look at our focus list review for that weekend, it's looking ugly here. It looks like it's going to violate the 50-day, but it doesn't really, and turns and goes higher. If you're going to buy that, I think you got to buy it up here. And the weekly chart also is just really goofy. So I can't say for a stock that trades 348,000 shares a day, it's one of my favorites because it's too damn thin. Have you followed Navi, the student loan company? No, I haven't. So, yeah, they're gonna. I don't know. I'm not gonna buy that thing. It's news oriented, I suppose, because they're talking about student loans. There's over what, $1 trillion, one and a half trillion, something like that. But it's all defaulting.
$1 trillion in student loans right now.
Yeah. So, I don't. Yeah, this is just news oriented, but there's nothing to play here.
The technicals are real ugly on this thing. So, below the 50-day, it gapped lower a couple days ago. Yeah, no, if anything, it might set up as a short. But yeah, I mean, the story is interesting, but the price is the final guide, or it's the final
it's junk.
key to
it trades 3 million shares a day. That's pretty good trading, but it's just junky pattern. So somebody says Tillerson is a fan of carbon tax, which could be bringing in some new investors into what? Tesla? I think right now they're just eating up the shorts, and the company isn't falling apart, but I don't know if that's what you're talking about, referring to. Anyways, let's look around some more. at some stocks. WB Weibo is corollary to Momo, and you have a double bottom formation where it undercuts the lows here. I thought this was viable down in here, and you had some pocket pivots coming up through the 50-day up here. And now you're hanging at the 10-day line, so look for a breakout through the middle if you're a breakout buyer. That's a joke. I would be buying more along here using the 10 or the 20-day line as my stop. I like Nettie's is another one. Acts pretty well. It's trying to come up the right side of a new base, and it has had some pocket pivots. There's one here along the 50-day line, and then you have some other ones, I believe, here, although I don't think that was extended for the 10-day. And you buy it on weakness into the 10-day line. That seems to act pretty well. We've got BABA up there. BABA's probably one of the leaders, and that's coming in nicely, volume drying up. So that might be coming into a buyable position here. So something to keep an eye on as they pull in. But and earnings are out of the way as well. So the closer it gets down to this 99.94 low of the gap up day, the better. And so I like that in there. Box is whoops. Box seems to act pretty well. So it seems extended, but if you look at it on a weekly chart, you are getting tight in here. Maybe it's going to set up as a 3 weeks tight. This is a big story. You got some overhead from the left side here. I don't know how much of this is really in play, but it's obviously building this. It's broken out of this sort of double bottom formation, and it's trying to hold tight, but it's hanging underneath the left side of the pattern here where you have some overhead, so I might have to work there a little bit more before earnings come out. Let's see. We have Yelp on, and there's actually Yelp is acting okay. It's had some pocket pivots along the 10-day. That's where we put it on. It's up a little bit from there, so earnings are coming out, I think, next week. And I think this story is compelling, but whether I would hold it to earnings or not, I don't know. I like Grub too. This has been one I think I've talked about before. This is one where I was shorting it down here. I think I talked about this last week in the webinar. You can check that, and anytime it pulls in, I go long again. And so now I was long this thing coming in earlier in the week, and had a nice move and sell into this. But it's building a cup here, and I think you have huge amount of short interest here in the stock. I think it's 10.1 days at so close to like 16. What did we decide there? Dr. K was like 12, 13. No. Yeah, fair amount of 13, 14 million shares. I got to look that up. In any case, it's got a fair amount of.
Yeah, it's 10.2 days of short interest.
Square, and to me, I think it's a cousin to Yelp. So Square is kind of square here. Remember, it's got this big pattern here, so it's coming out of this big ugly base, or trying to. Whoop! What did I just do? Made my everything too fat. There we go. So you got this like huge, almost pod-like pattern. This would have been your cup with handle breakout down here around 1250. Now you're pulling the 10-week line. You found support there, so that's constructive. And I think this probably becomes viable in here. You got earnings in early March, so this looks possible, like could be bought on the pullbacks. But I would either be very opportunistic on a move close to the 14 and the 50-day, or wait until earnings happen. But this thing I thought might try to go 3 weeks tight in here, but unless it closes at 15 or just under 15 today, it's not really going to do it. So, but it's pulling back. You can see you're getting some selling along the highs here. You can see the volume spikes on the downside over the last 2 to 3 weeks, and that tells you that people are selling into this rally because it is way up there, and you've got some overhead probably from this peak back in April of last year. So let's see. Viva, I don't know why I think of that Viva Las Vegas. This one's not really holding the 50. I've traded this and gotten some moves out of it, but it doesn't really go anywhere, and it's drying up on the volume here, retesting this low at 42 from 4 days ago. So maybe it's going to turn. You watch your 620 on that, but I don't know. I'm not that enamored with the stock. It looks a little funky. So CUDA's like that as well. A similar situation, and it had a nice move yesterday, but it's a relatively thin stock. It's I'll actually play this one, but not heavy. And you got volume drying up. It's pulling into the 50-day. Maybe that puts in a low-risk buy position. I sort of like the weekly chart. You got a couple of nice spikes in here on the upside, but they did stall a little bit. So the critical test is here along the 50-day line. If this thing can't hold, then it's hasta la vista, baby. So somebody says, thank you for explaining pocket pivots on weekly. Well, I didn't actually. I'm just saying they don't exist. It's like asking about pocket pivots on the monthly or about driving a car using instrument flight rules, anyways, for playing. But one more, does the same apply to looking at daily sector charts? Well, you don't. Pocket pivots are applied to individual stocks. What I would say is read our book and read the whole chapter on pocket pivots. It explains and answers all your questions. So, you know, I would suggest acquire some knowledge before, and then maybe you can ask more say, you know, more sophisticated questions in some of these basics, like you're going to apply pocket pivots to index charts. We write about the fact that if you're going to apply pocket pivots to any sort of ETF, you would use like a single commodity ETF like we've done with silver and gold. But index is a broad number of stocks, so you're not getting any clues about somebody accumulating an index using pocket pivots. But you know, this is what this actually illustrates another concept I talk about, where a little knowledge is a dangerous thing. You know, you show somebody a rule like an undercut and rally, and then everything is an undercut and rally. It was kind of like when Bill O'Neill first talked about the ascending base. Everything became an ascending base. Now everything's a pocket pivot, and everybody wants to apply pocket pivot rules to weekly charts, you know, 5-minute charts, and you're kind of over applying it. So you know, anyways, read the first book, I would say, and then read the second book, and then if you feel like you want to learn about short selling, read the third one. So as far as I'm concerned, they're all pretty cheap. $30 I think they go for. Anyways, so I don't mean to rag on you. I'm just saying, if you learn a little bit, you can ask better questions. And then also, don't get carried away with the concept. You know, I mean, everybody, like yesterday, somebody was telling me CAT was an undercut and rally, and it's like, okay, what did it undercut? Okay, well, it undercut the lows of the gap up day here, but that's not an undercut and rally, because remember, an undercut and rally relies on one specific psychological component inherent in the chart, and that is that when you break support in a base, so if you have a situation where you're breaking support like Priceline was back in early January, that looks bearish, and you know, everybody sees that as a breach of support. It fakes everybody out because they're leaning the wrong way, and then boom, it turns back to the upside. That's the essence of a Wyckoff spring or an undercut and rally, as I refer to it. So, you know, undercutting one day's price range is not an undercut and rally, because you're not really drawing everybody out based on some idea of breaching a major area of support. That's obvious. So here, though, it fills the gap. So that's another, you know, that would be more relevant here. It fills the gap, turns out of it, and it's trying to go higher. So, but the, you know, market's a little bit, either it's biding its time here or it's going to roll back. So like I was tweeting earlier, this is either the beginning of a glorious new bull market or the mother of all short sale opportunities. The only problem is you only know that in hindsight, and you have to trade in real time. So anyways, but Square looks feeble. Kuda's looking feeble here. Momo hanging in there. What are other names on our list that we haven't covered yet, Dr. K? Glaukos is one. That's just hanging tight.
Did we go over Square?
Yeah.
Let's see. Yeah, because we
Okay,
got like what?
go and check my
on our list, something like that now.
Facebook and Amazon just keep going higher. JD is interesting. It tried to move with Baba the other day, but it kind of backed down a little bit. It's just setting up, it looks like to me. This is acting okay. Volume is 97% below average at this time of the day, so bingo. Netflix is hanging in a tight range here. Volume is trying to pick up today, so we'll see what happens there. Here's Quantana. This thing is, here's another example of a cheap little stock that goes nowhere for you fast.
Semiconductor, so you know, yeah, it's a pretty
talked about talked about Zillow. So you know, in general, I think you got some nice moves, but a lot of them happen excuse me, earlier in the month. you can see like even with Glaukos, we put it on down here on the gap up move. So you bought it there, you're making good money. Now it's bopping around. So Box was the same situation. We put it on down here, just above the 15 level, and it had a huge move, and now it's way up there. QTNA, in a similar situation, we put it on right here. You could have bought it there. You have a nice 20% move in 2 days, and then you sell it. Now it comes all the way back in. I don't know if this thing's viable in here. Maybe it is. Maybe it isn't. But it looks questionable. Acacia is interesting. It looked like it was going to get going. This thing looked to me like it would try and run off of here, but the key is getting through the 50-day moving average, which it can't seem to be able to do. That, you know, even with all the constructive action about opticals and fiber optics, not really happening here. So, and then of course Twilio comes up. These are all the hot names from you know, October or August rather. I'm sorry, of the hot August names, as I call them. All the IPOs that came out at around that time and then just ran and went nuts. Twilio is one of them. Is this trying to turn here? So far I don't see anything but sellers coming in and hitting this thing whenever it tries to rally. Impinge was another one that was a hot mover. It's trying to build a new base. It's sort of a weird double bottom cup with handle, but not really, you know, setting up and tidying up. It's very very wobbly. Nutanix is another one. Somebody was commenting to me yesterday that they think this is in play. I'm not sure what defines in play, but it's a pretty loose pattern, and I would say if you're going to play with this one, you want to buy it coming into support at the 10-day. So trying to dry up here. Let's see, Dow's off 17, NASDAQ off 2. It just kind of sputtering around here. So Flex finally, contract manufacturing finally after 1,000,000 years. Well, it's extended now. Why didn't you tell us about it last week? So, but am I going to pile into this? I don't know. It's had big moves before in the pattern. It seems to trend along the 10-week line, but I don't know. It's too extended for me right now. Notice that in the biotech space is kind of also. You know, you would think, I mean, initially they all rallied when Trump was elected. That's why you have these big gap ups over here in early November, like with Celgene. And it's trying to build a base, but it's not going anywhere. Gilead's also looking pretty grim. Amgen, these are the big stock biotechs. It's like trying to come around, but not really. Biogen, can't decide what it is. It looks like a short at the 200-day line, and you see these patterns just not going anywhere. And I know some people have theorized about biotechs coming on and being a leading group in 2017. All I can tell you is de facto, so far they are a lagging group in 2017. So, you know, trying to make predictions about what group is going to do this or that, I think is kind of pointless. You have to go with the price volume action that you see in real time. So, you know, I think the key is a name like Clovis had a pocket pivot. This is a breakout. This one's actually worked. And of course we have Glaukos on our list, but I think those are the only two that we have. Insight's another decent one, and it's moved up. I think it's running out of gas here, though, and it's going to pull in. Moving down the line here, what else? I think I've covered most of them. Just kind of running through my list here and looking to see what I might. This is a kind of interesting, I don't know the stories here. Mercury Systems, although it was a buy 3 days ago after the Bible gap. It's kind of a thin stock, but that was one that hit my radar recently. Everbridge is another one, but look at this thing. This had a nice pocket pivot on Tuesday, but it's not going anywhere, and it's pretty thin. Pretty typical stuff. Now is another one. This is had a Bible gap up. It's trying to hold here. This might be playable. I don't know. It's pretty volatile, so I'm not really sure here. We have the materials stock. So Eagle Materials had a gap up move. It's coming in. All of these were earlier in the week when Trump confirmed that he's building the wall with Mexico, but now the problem is Mexico doesn't want to pay it or pay for it. And now he's talking about going a different route. I don't know what that means, but it seems like a lot of these materials names, cement, you know, like CX, CEMEX even rallying on that. Granite Construction did not, but I don't think, what's the one I'm thinking of? USCR, that's US Concrete. That's rallied too, but they're all coming in. You know, this is sort of a news-oriented group, and so MLM trying to break out. that's a clean breakout for all you breakout buyers. But it might pull into the 10-day line. And if there's some news about, oh, well, maybe we're not going to build a wall, or we're going to build a smaller wall or a different kind of wall, or it's going to be a laser wall, I don't know, it could change. So other ones in the group that are similar related, Vulcan, and these things rise from the dead. They look like garbage, and then here they come right back to the tops of the bases. You have MLM actually breaks out. Eagle Materials actually breaks out. The rest are moving up in their patterns. So it's kind of a mixed bag there, and I think it's a lot about getting lucky and catching the right stock at the right time, and invoking the ugly duckling and buying when they look ugly or when they're sitting in the base, and then you get a nice upside move and you sell into it. So, but that's mostly what we're seeing here. A lot of interesting movements, but nothing really sustained, no big trends. And I think that you have to stick to the general approach of buying on weakness. So, I'm watching this Momo here, trying to hang in there. Anything else, even this one looks interesting on the pullback in here because the volume is drying up. Let's check out my handy dandy here we go. Running 41% below average. So maybe that's a viable one. So anyways, any final questions before we wrap it up here? Anyways, if you haven't already, I would suggest signing up for the mini conference and traders dinner. So that format seems to appeal to me because of its simplicity and also the intimacy. I frankly don't want to be doing big conference or seminar or whatever you call them with 200-300 people and ripping people off for $2,000, $3,000, $4,000, $6,000, $7,000, $10,000 a person. I want to have an intimate thing where I actually can meet some people because I make a lot of very cool friends. Some of you are on this webinar right now during these kind of events. Like I really like the HGS conference, which used to be around, 50 people. That was a nice intimate setting, and you meet a lot of interesting people, and I make some nice friends. And Dr. K and I have both made some great friends from doing the website. So we're hoping that the webinar or the mini conference works out the same way. And so we want to do it in a format that allows for that rather than a big quagmire. And as far as I'm concerned, people charging you $5,000, $10,000 for a seminar, I think it's a ripoff. And I also think that 3 days. I know that Ian and Ron over at HSI used to do a 3-day workshop, but it was fairly comprehensive. And of course, Ian was a very deep in what he would show people in terms of using their software, and I thought that was very valuable. But for the most part, we feel we can keep things very efficient with a 3-hour presentation followed by as much rapping about the market at dinner time as you want, and we will have charts available projected up on the screen so everyone can see, so that will facilitate the conversation. As far as dancing on the table goes, we're going to put out a list of acceptable dances for those of you who drink too much wine, so that'll help. So in any case, but I know wasn't somebody, Dr. K, emailing us that they were hoping we would do a 3-day workshop because they feel abandoned by IBD, and I'm not going to go there. 3-day workshop. I have a life. I think. I would argue I don't.
I'd rather personally stick to this more personalized, informal type of get-together where it's a mini conference, and we could do more of these. I don't mind spending half a day doing a presentation that goes 3 hours, and then hanging out with everyone for another 2 or 3 hours at dinner.
Yeah, something that's fun. It's fun. It's kind of like going to dinner with everybody, and more like that rather than speaking to a big conference. We've done that. I remember the one we did in June. I think it was June 1st or 2nd of 2000 to like 700-800 people in New York. That's a quagmire. Anyways, we don't want to go there, you guys.
But yeah, no, I wouldn't. If this works out well, I wouldn't mind doing these on on a more regular basis. If there's the demand, but that's the other thing is I've heard countless times that people don't understand why we're all these, well, that one guy was talking about, feeling abandoned, but others too. I mean, a lot of people have dropped off, and you can see it from, just the statistics of the number of subscribers and the Alexa rankings and all that
For
on
IBD.
IBD. And they don't know where to go, and someone just said flat out, you guys are great at what you do, but you don't have any marketing. You have, I mean, we have some marketing, but it's minimal, and it's true. I mean, everything is more or less word of mouth, but these days it's a lot harder to, I guess, get that out. There's obviously a solution here somewhere to reach more people who feel like they don't have anywhere to turn at this point, and they're still learning. I mean, a lot of people are obviously on that learning curve, and to feel this way is unfortunate. And I mean, all it takes is come to our website, but that's easier said than done. I mean, we need to somehow reach out to these people and make them aware of what services we're providing that may be able to add value to their trading style.
I think it's funny. I mentioned NTNX, Nutanix, and I suddenly see 17,000 shares going by. I mean, it's in position, so what the hey. Anyway, so that's our objective with this event. Small is beautiful. That's always been. I don't know if anybody ever read the book by E.F. Schumacher, Small is Beautiful, but I still abide by that principle. So, in any case, that's all we've got for today, you guys. Some ideas there, some things maybe to act on. I can see you're already acting on the Nutanix. And as it's moving up. So that's it. Thanks for showing up. Hopefully you got some ideas out of this. On the short side, I'm looking at STLD and X, but they're not really coming apart. And I think you want to. You'll see a couple of names show up that might qualify. They start to go on my short sale watch list. And right now I've got something like 7 names on my short sale watch list and 90-something names on my long watch list, which a lot of times that sort of spread between the two lists in terms of the number of names can tell you we're going to pull back in the short term, or that you're getting a little bit stretched, especially when you see that a lot of these stocks had big moves back in early January. And so they've all kind of slowed down from here. Anyways, that's all we've got, you guys. Any questions, you know where to email us. And we'll catch you next week. Have a great weekend.
So long, everyone.